The year 2022 was an eventful one for the UK. It lost its longest-serving monarch, went through 2 prime ministers, and faced economic stagnation, financial turmoil, rampant inflation, and a cost-of-living crisis. At the beginning of the year 2023, the UK saw one of its biggest strikes in decades. The policymakers, however, have so far preferred to present a tough front in negotiations, insisting the money is not available to grant the salary increases requested by the protesters. But the strikers, from teachers, civil servants, and train drivers to nurses, are not ready to give up their union actions. The UK is one of the largest and most developed economies in the world. Its nominal GDP of $3.1 trillion places it as the 6th largest economy globally by nominal GDP and 8th largest by purchasing power parity. As a major trading nation with a large and developed financial market, the UK plays a crucial role in the global economy. The UK's economy is diverse, encompassing finance, manufacturing, technology, and services sectors. London is one of the world's largest financial centers, and Britain is the home to many of the world's largest banks and financial institutions. However, the 2008 financial crisis, Brexit, and the COVID-19 pandemic have all presented significant challenges to the UK's economy. In response, successive governments have implemented various measures to support the economy, including monetary policies, fiscal stimulus, and investments in infrastructure. Despite these efforts, recovery has been slow and uneven. For the first time since record-keeping began, in November 2022, Paris overtook London as Europe's biggest stock market. French luxury goods makers have seen significant increases in their share prices in recent weeks. In contrast, British shares lost their value against the fallen British pound. The UK's inflation was at a 41-year high of 11.1% in November 2022, driven by soaring energy bills, while food costs have increased by 15% from a year ago. As per the Bank of England, the British economy may not return to its pre-pandemic level until 2026. The UK's Office for Budget Responsibility warned in January 2023 that the country's living standards are set to fall over the next 2 years by the largest amount on record, due to stagnating wages and rising prices. Meanwhile, the International Monetary Fund predicts a 0.6% contraction of the UK's economy in 2023, with the UK being the only G7 country expected to see a decline in growth. As per the IMF forecasts, even sanctions hit Russia with 1% growth is likely to outperform the UK this year. But the real puzzle is, why is the UK an exception? In this video, we will delve into the underlying factors behind the economic challenges faced by the UK, and the future that lies ahead for Britain as a major industrial power. Welcome to the Isle of Knowledge, where we explore, refine, and share information on a multitude of subjects. Before the 2008 financial crisis, the UK had enjoyed a relatively stable economy. However, the 2008 financial crisis brought about the country's most severe recession since World War II. In response, the UK government was forced to rescue several major banks to stabilize the financial system and implement a quantitative easing program. Despite these measures, the country struggled to overcome the daunting challenges posed by the 2008 credit crisis. While other nations began to recover in the early stages of 2009, the UK lagged behind in its recovery efforts. This slow recovery resulted in a new economic state with low levels of output and employment. It took the UK 5 years to regain its pre-crisis GDP levels, and even a decade after the crisis, the country's productivity remained stagnant, with only a weak increase in wage rates. The low productivity resulted in reduced output levels. Additionally, the sovereign debt crisis that plagued southern Europe after the 2008 financial crisis undermined the export opportunities for UK companies in the Eurozone. While the UK's private sector was able to compensate for the job losses in the public sector, the restriction of exports to its neighbouring countries hindered the ability of the private sector to grow. This caused the employment level in the UK to settle at a new, lower steady state. With limited private sector expansion and low levels of employment, productivity was severely impacted, limiting the potential for robust long-term growth even after the recession had ended. The United Kingdom is a service superpower. It is the second largest service market in the world and the largest in Europe. The UK's services sector accounts for over two-thirds of all UK businesses and contributes to approximately 70% of the country's total jobs and gross output. Historically, the UK's services sectors have relied heavily on services exports, with the European Union being their main customer. However, the uncertainty caused by Brexit had a ripple effect on Britain's service sector. The weakened services sector has a detrimental impact on the interconnections between the services and manufacturing sectors, whose competitiveness is increasingly dependent on the integration of services. The long-term effects of Brexit on the UK economy will depend on various factors. As per the popular pro-Brexit argument, Brexit may provide more opportunities for the UK to pursue trade deals with countries outside of the European Union and potentially increase its economic independence. However, the sense of economic uncertainty brought about by Brexit had a negative effect on the overall UK economy. The industrial sector plays a crucial role in the UK's economy, accounting for approximately 20% of the country's gross domestic product. This sector encompasses several subsectors, including manufacturing, construction, and energy production. The UK's manufacturing sector has faced numerous challenges in recent years, including increased competition from abroad and the decline of traditional industries such as coal mining, textiles, steel, shipbuilding, printing, and publishing. Although the UK continues to boast a robust engineering sector and high-tech industries such as aerospace, biotechnology, and renewable energy, their dominance in these areas has diminished over time. The COVID-19 pandemic has dealt a significant blow to the UK's construction sector, with a decrease in demand for new construction projects. The industry was expected to recover as the economy reopens and the demand for new housing and infrastructure projects increased. However, the prospects for growth in the UK's construction industry are now uncertain, given the rising borrowing costs. According to the Bank of England, home loan approvals declined to 35,600 in December 2022 from 46,200 in November, marking the fourth consecutive monthly decrease. Some industry experts predict that UK home prices could drop by 20% in response to interest rate hikes, which could have a detrimental impact on the construction and housing markets. The UK's energy sector is primarily focused on oil and gas production, nuclear energy, and renewable energy sources. The country boasts substantial offshore reserves of oil and gas, which is a positive aspect. Additionally, the UK is actively promoting the development of renewable energy to reduce its dependence on fossil fuels. Despite these efforts, there are arguments that the country's investments in the clean energy transition are not at par with its benchmark requirements. The UK's national debt has surged in recent years. In 2005, it was less than £0.5 trillion, but at the end of December 2022, it had climbed to £2.5 trillion. In terms of GDP, the UK's national debt was 38% in 2005, but by the end of December 2022, it had reached 99.5% of the country's GDP. This high level of debt and the prospect of rising interest rates will put added pressure on the country's interest bill and make borrowing more challenging. The UK's economy will need to find innovative solutions to address these pressing concerns. The former governor of the Bank of England, Mervyn King, noted that during the COVID-19 pandemic, the Bank of England printed over £500 billion worth of money. As per classical economic theory, when a lot of money is put into the system, inflation follows. The situation is exacerbated by the ongoing Ukrainian crisis, which has caused the pound to fall toward parity with the US dollar. As a country heavily reliant on imported raw materials and components, a weak pound only adds further strain to the economy by increasing inflation. The UK currently faces a plethora of economic challenges, including high inflation, mounting debt, a recession, and an energy crisis. This has resulted in a cost-of-living crisis, with 500,000 workers going on strike in the first week of February 2023 to demand higher pay. The strikes have severely impacted the country's transport networks and left many classrooms empty. Policymakers are faced with balancing the need to raise workers' pay with controlling inflation. To achieve long-term economic stability, it is vital for the UK to address its underlying structural issues, such as low productivity growth, a lack of business investment, an aging population, and a shortage of skilled workers. Whether this downturn is cyclical or a result of deeper structural issues is yet to be determined, but addressing these challenges will be crucial for a strong and sustainable recovery. Do you think that the UK is in a structural hole, or this is just a cyclical downturn? Please share your thoughts in the comments section. We will meet you with another fascinating content. We wish you an eventful day.